Debt is a beautiful thing. Yeah. But if you owe more than you actually are coming in with or bringing in, that becomes a problem. Yeah. That becomes a huge problem.
And it's funny, like, debt gets a bad name, but debt is really how you build wealth.
Absolutely.
Yeah, it's just debt takes on the brain power of the person that is issued to.
Yeah.
Yeah.
Now, debt or leverage, right?
It's the same
debt,
thing.
It creates leverage.
See, the reason why I'm using the words differently is because debt, right? Some people, because of financial traumas, program, what have you, debt is bad, right? Some people grew up, only use cash because of whatever their parents did, so all they use is cash. So they won't take out a credit card or what have you because debt is bad.
Bad debt is bad.
Right, there are different types of, just like there are different types of cholesterol.
And I get that, but there's people out there who need to understand that good debt is leveraged debt.
Yeah.
Right? Or effectively leveraged debt. Like you use debt to buy assets which bring in income versus buy liabilities.
Yes.
Right? So
there you go.
When people understand it from that perspective, it's, hey, it's not debt is bad. It's if you use it incorrectly, it's bad. Now, some people, obviously to your point, you use most of your debt to buy assets to bring in more income.
Yeah,
some people, they just have a credit card because they want to have a credit card. And that isn't fundamentally bad if they use it the way that Orlando was speaking about, where they actually have the money. They're just using a credit card for either, because it's better to use a credit card than let's say an ATM or debit card, right. Because if there's fraud, you sort of waiting a couple of months to get your money back. With a debit card, with a credit card, you didn't touch your money anyway.
Yeah.
So there's protections of using a credit card.
100%.
Right, but then people have to really get, I guess, educated on how to effectively use their debt, be it a mortgage, personal loan, or what have you.
Yeah. I got a interesting question. I have an answer. I'm just curious of what you think. Like, what's the best way to build credit? Like, to say, if I want a score, like, to build credit. If you were starting from zero, we can start from zero if you messed up your credit previously. What's the best way to establish credit? I have what I feel, but I'm curious to see what you guys are saying.
The first thing is that people have to remember that the credit score is just that. It's just a score of how well you pay, how well you manage your debt. You know, they talk about the 35%, the 30%, 15% of this and that. So there are reasons why and the way that it's calculated. But if you're going to start from scratch, for example, just remember that credit is all about debt. How well do you handle debt? So if I have a credit card, even if I start with a secured card, and that reports to the credit bureaus, okay, because every secured card doesn't. But if a secured card reports to the credit bureau, it's telling the bureaus, okay, this is the amount of money that he put in, let's say $300. He never went above the 30-day, the 30% limit at the end of the billing cycle. And some people, for example, don't understand. Yeah, but I can't only live on 30% of my money. So you don't have to. The reality is you've got 30 days before that billing cycle comes in. As long as you refill or pay down that debt before the due date and before your bill cycle date comes through, which is usually 3 days after the bill due date, you're good. And you're going to look great to the credit bureaus. And after you've done that for a few months, the bureaus are going to report, hey, this guy's a pretty good borrower. Let's extend him some credit because we can trust him to pay it back, or her to pay it back. Make sense?
Yeah.
And the more you do it, the more credit you get, and ultimately your scores go up and you become less of a risk. And the less of a risk you are, the more money they give you, as long as you can show you can handle it.
No, that makes sense. I would, to your question, it depends on how soon that person wants to build their credit, right? Are you speaking about somebody who wants to build their credit, let's say within 6 months, or someone who wants to? Do you have the slow route?
There is a fast route too.
Right. So, which one do you want?
I mean,
do you need to close a deal in 6 months, or do you want to close a deal? Do you want to be okay in 2 years?
Are you talking about trade loans?
No,
There's a bunch of different ways.
Educate me. I'm curious about. I want to hear this.
So for somebody who wants to do it quickly, right?
Yeah.
There's various ways from the standpoint of Orlando mentioned one in terms of credit lines. Right now, even with a secure credit card, if you will, that reports, different banks give different amounts, right? So a lot of times people start off with $200 or $300.
I don't like.
I got you. I got you, bro.
Okay.
Right. So, but instead of $200 or $300, there's certain banks that you can get up to $2,000, $3,000.
Well,
right.
it's your money, right? So
Yeah. Now, but a lot of creditors or banks only allow up to $300.
Oh, absolutely.
You know,
You're right.
but there's some companies who will allow $3,000. Now, why is $3,000 better than $300? Because it reports better when you have not more outstanding, but a higher credit limit, right? That plus being an authorized user, right? But an effective authorized user. You don't just go to anybody. You go to someone who has a high credit limit. So let's say like $20,000. They're under that 30% cap. They've had that credit card for X amount of years. So extended time, you become an authorized user on that. That's the second thing, right? And then you have these companies now that just came up that you can take out like a loan to buy like jewelry or what have you. Now this is someone who has this is quick, so somebody who has the money to build it up.
Listen, I'm gonna disagree with the first one you said. If any of y'all get a secure credit card,
He likes secure lines of credit. That's why.
Yes.
I was getting there, and I know.
Right.
Yes.
Right.
Stay away from that credit card, man. The secured
Line of credit.
loan, man.
Secure loan or secure line of credit?
Secured loan.
Secured loan is always
Loan.
Yeah.
For several reasons. The banker sells you the line of credit. Here's why. Right? First one. If you go get a secured loan, you go in with $2,000, so to speak. You go in with $10,000, whatever the case may be. You go in, you open up an account, they put the $2,000 in an account. They freeze that account. And then they give you a loan for $2,000. So you walk back out with the same money you walk back in with. Right? So if you max out a credit card, it actually affects you negatively. But you taking the loan is a beautiful thing. The interest rates. They got secured loans right now at 2.75%.
Okay.
Yes. Their credit card would be like 17%. Not only that, they also give you, you get this with the credit card too, but they also give you I think it's 0.2% for the frozen money.
Right.
Now, if you're really disciplined, you put $2,000 in the bank, you take the $2,000 you just got from the loan, you add the interest to it, so that $40 or whatever, $50, whatever the case may be, and you let it sit in the account, automatically withdraw. After a year, a month, whatever the case, 6 months, whatever the case may be, you can take the money that's left over, pay the loan back, and get released back. So you save. It's a savings plan with credit building, and you can go big. You don't gotta go 300. You can go 10,000. 20,000.
So technically, if you started from scratch, you can take $10,000, go to a bank, and get a secure loan.
Yes.
They give you the $10,000 back.
Yes.
And you can walk into another bank, do the same thing with that $10,000. So now you have 3 lines with the same.
Yeah, but you gotta pay.
No,
you
$10,000 to each bank.
Yes.
But you have.
Yes.
This is someone who wants to build.
Right.
Now, I'm not saying anyone to do this, but someone who.
Yeah, but you just have to make the payments.
Yeah.
And to your point, you can do that for, let's say, 6 months, right? So then you take the rest of the money from one, you pay off the loan, they release the money from the secure, and then you do the same thing for the second one. Yeah, domino. Exactly. Yes.
Well, you're stacking, but you got to make sure that that's also bringing something in. That's money now. Money that's sitting is only getting old, and it's also depreciating, like literally by the day. So once you pull that money out, that same $2,000, it has to be out there working. You can't just sit there and look at it and say, "Oh well, I got $2,000 in the account."
You can't have lazy money.
Lazy money makes no money. Absolutely. So you have to have it doing something in the process.
Yeah.
Like I remember, I can share a story. There's a gentleman, because I've been helping people get their credit up for years and years. So there's a gentleman that
Sorry, hold on. So for the people who don't know, right, and our apologies. Can you please let the people know who you are, what you do,
Oh, geez.
how you do it?
Okay. Well, it depends on when you caught me, but
What, Wall Street, real
Wall
estate,
Street.
credit, like
right. So I started as an investment banker for quite a few years. Then kind of stepped away from that. Wanted to live my life. Wanted to be a dad, all that good stuff. But in the process, I realized that although I was dealing with a lot of institutional buyers, institutions kind of deal with credit differently, a whole lot differently. But I went into the mortgage business and understanding very well that one of the reasons why people could not, let's say, buy a home or refinance, oftentimes get a lower interest rate, is because they didn't understand credit. They didn't understand how to do things with credit. And so I also recognize that as a mortgage lender that I could not get somebody to get a mortgage if I didn't help them with their credit. So it was kind of like one of those catch-22. So I became pretty specialized in that space in terms of credit. And in so doing, helping people use that credit to leverage, to do more with it. And that kind of leads into the story that I was sharing, because I met this couple, and both of them were police officers right here in Queens, as a matter of fact. And guy was boasting, I don't need any help with my credit. I'm great. I have 780 credit score. I've had it for 20 years. And my only comment to him, and it was a continuous question that he couldn't understand. I said, but what have you done with it? What have you done with that 780 credit score? He said, what do you mean? I got a 780 credit score. I got every credit card you can think of. I said, but what have you done with it? And he didn't get it, because I said, you realize you're only 1 month away from that 780 being a 680. Like 1 month, one missed payment on an American Express card, just because you were on a vacation and you forgot to send a payment. Life could happen. That 780 could disappear very, very quickly, and it'll take a while for it to get back up there. And it's very easy to lose 100 points on your credit score, very easily.
Yeah.
So he still didn't understand it. I said, realize that with that 780 score, you could go to just about any regional bank and some bigger banks, and you can use that credit and leverage at least $20,000 to $40,000 with just your signature.
Yeah.
It's like, man, you talking crazy. I said, listen, it's just something I've been doing for well over 10 years. And he didn't understand that leverage now. I asked him, okay, so how many pieces of property do you own? Well, I only own my house. Well, how many other businesses do you own? I'm retired from the police, so I don't have to do anything else. So, but what else do you own that credit has created? Do you lend money out? Well, no. I said, well, there you go. If you don't have a reason for the 700 plus score, you're not going to do anything with it. So it's just like dead money.
Yeah. I mean, the goal's not to die with a good credit score.
Yeah, well, that was his point.
Yeah.
That was his point. Because you know what it is? Oftentimes people compare themselves to their peers, not realizing that that's not who they should be comparing themselves to.
Yeah.
There's a whole other tier that's above them, and that's who they should be looking at. Like, how can I live like them? What are they doing that I'm not doing?
Yeah, and the thing is, like, I was speaking to somebody over the weekend, and they're like, well, I got 800 score. I said, well, yeah, I'm only in the sevens, but I can go to the bank and get a loan. Like, what are you doing? And then not only that, I'll tell you this, I'll share this story about just, I guess, mindset. I remember when I first hit the 700, this is coming off of 500. So I'm like, coming off the canvas, like. So I remember, I'm just like, all right, is this real? All right, because, it's, when you, I don't know if you guys have been there. I've been there. When you go to the retail store and they say, do you want the 10%? You're
like, nah.
Yeah, you go for it. They're like, nah. Well, they like, and they make you feel good. You should just try it. People do it all the time. I mean, they like, yeah, I'll go for it. Next thing, they're like, sorry, Mr. Dixon. So when I said, you know what? Let me see how this works. Right? So I go into a bank. Right? I'm not gonna say the bank, but I should say the bank. Well, anyway, I'm not gonna say the bank. So I go into the bank and they're filling out everything. I know my scores are good now. Like I'm mid sevens.
Confident. You walk in there like, listen.
I'm still nervous though.
Of course.
I'm not. The confidence hasn't rubbed off. I'm not used to having good credit. So So I go in there and I say, listen, I want to borrow money. I fill out the form, everything like that. They said, so I'm sitting there like, you know, got my fingers crossed, and they go, yeah, Mr. Dixon, your top-notch credit improved. I walk out of there with a $16,000 check. My wife couldn't believe it. She's there like,
It's like, let's get out of here immediately.
But I wasn't afraid. And the thing is, like, I was so paranoid to not mess that up because that feeling felt so good. And I was able to take that money and obviously grow it. And, you know, it's when you have that mindset with good credit and you have the mindset to actually grow the capital, like sky's the limit. I mean, if you're able to get a loan and you have the mindset that I'm going to make investments, sky's the limit. Like, I mean, you got no choice but to get rich.